What's up, traders? Let's discuss what do we actually need to be able to find out if the stock is going up and going down. Well, I'm going to give you something right now. In fact, four of these tools. So there's movement tools and there's momentum tools. And we're going to go over in this video exactly what they are, what the two movement tools are and what the two momentum tools are. This is going to be a two-part series. So if you want the first part, you got it here. The second part, don't forget, you got to subscribe. You got to like the video. Turn on the notification bell. That's what we're here for, to give you the full knowledge. Not just a little bit, the whole foundation, and it starts with these specific tools. Okay, so make sure, take some notes, because after this video, you'll have a lot more clarity on what to look for on a chart so you can make a great decision. Enjoy the video. Talk soon. Welcome back and welcome to module number 3. Now, this is where we really start getting technical with everything. At this point, you should have a good understanding of how the psychology works in trading. And I want to congratulate you on that, because many fail to understand these concepts their whole life. That is why so many people fail, is the things that are blinding to us, things we've never think about, things in our life that are so subconscious, but that are killing our gains, killing our success. So great job on proceeding, great job on your patience, great job on not taking shortcuts. And for any reason, you're skipping a module, I strongly recommend go back, check it out. It's good for you. It'll help you out to go through the foundation of the psychology of the business before going into the technical part. But either way, let's begin lesson number 3, the power of anticipation. Do you remember the movie The Matrix? In the movie, the main character Neo was given special powers where he all of a sudden was able to be a master in Kung Fu and even dodge bullets. This is the power of anticipation. Being able to anticipate when a bullet is coming at you gives you a chance to react. Being able to anticipate an attack gives you a chance to defend yourself. Can you imagine being able to get the same power to anticipate with actual trading? Being able to simply tell the future of what the stock will do based on the past? Imagine just plugging a USB inside your head and poof, you can now see the future. Being able to see what the stock will do for the future is powerful, isn't it? Now, we would love to be able to provide you with something so magical. But the reality is that we can't predict the future every single time. In fact, if you remember the movie, Neo, the Kung Fu master, and the bullet dodger was great at doing both. But even as the master himself got beaten by Morpheus and caught a few bullets. In this training, we will talk about the USB that will get you to a point where you will be able to anticipate what will happen with your stocks based on patterns that were created. Now, the USB is just a figurative point to this, but this special tool is known as technical analysis. Now, technical analysis is the study of patterns that have been used for many decades to assess which way the stock is going to move based on the psychology of how people tend to react. Technical analysis gives us that USB that will transform us from gambling blindly to investing. It helps us go from doing risky trading to managing risk. Now that's successful investing. There are many technical indicators that we can utilize in many different ways and for a bunch of different strategies. And the good news is that we have all these tools. The bad news is that we have all these tools. Yes, you heard that right. The issue The issue is that there are so many tools that you can't use them all. And if you can't use them all, which ones should you use? We will go over the main ones that can give you the upper hand on the market. Now, I want to warn you ahead of time. You want to make sure you utilize the ones that are a part of your trading plan that has been tested and proven to work. You don't want to use everything. You want to create what you want to create and stick to it. Simple as that. We will go over some powerful indicators that will start to transform your investing in a big way. You will be able to start seeing patterns and putting some logic to what we do. And that's big. So let's begin. The M&Ms are the key. No, not the candy, although they're yummy, especially the peanut ones. But the M&Ms of movement and momentum. So these two M's are the main pieces of what we study when we are trying to minimize the risk and predict where the stock is going based on patterns. We will reveal 2 tools for each for you. And these 2 tools alone for each, which is 4 total, is going to help you really start seeing this business in a different way. The first one are the candlestick charts. So if you look at a normal chart, this is known as a line chart, and it's what 90% use to make decisions. They may look at it from a 1-year perspective, a 1 week, or even a 5-year. But what this gives you is just the basic move of the stock. It shows you pricing. Not that it's a bad thing, but it doesn't give us a chance to see a real, true pattern. Unfortunately, this is the type of chart that doesn't give us enough information for us to make a true, logical decision. And that is one of the reasons people lose. The 10% use charts to give you more information on a single day and not just a simple dot. So for example, the most powerful charts out there are known as the Japanese candlestick charts. Now each candle on this chart gives us more of a story that happens during the day, a true pattern. So if we look carefully, let's break down what this candle actually means. So the candlestick has multiple pieces. There's a high point where the stock had an all-time high for the day. So for example, if a stock at some point today hit 380 and went back down, that's fine. The high point will leave a shadow known as a wick, which is that little stick. Now there's 2 types of candle, a bullish and a bearish. The white one is the bullish. Sometimes it's green, and we'll talk about the difference. The bearish is the red. So the high is, again, it's the highest point of a candle where they've been today. Sometimes these candles could be a week. One candle could represent a week or a day or even an hour. Anything. Not to be confused, we'll use it as a day. So this stock, let's say, went to 380 at the highest point. The low is the lowest point. So at some point, this stock might have been as low as 320. And then eventually went back up. On a bullish candle, the bottom is the opening. So that first line, the bottom of the candle, is where the stock opened for the day. And then the top is where they close. The 2 little wicks just shows you a shadow of where they were during the day. Pretty simple. On the bearish candle, it's the opposite. It actually opens on the top and closes on the bottom. So the day started where it was open, went all the way to the high point, went down all the way to the low point and finished at close, which is the bottom line of the red. These are known as the body. That is basically where the candle moved during the day outside of the highs and lows. So if you take the body from open to close or close to open based on which candle, that's what that forms, a bodied candle. And these are known as the upper shadow, again where the stock has been, and the lower shadow. The 10% have researched and studied the most effective patterns that these candlesticks produce and utilize them to make great decisions on the movement of the stock. The key is to understand different candles. For example, this is a full-bodied candle known as the Miru Bozu. You don't have to necessarily remember that name. It's a Japanese name. But understand a full-body candle and what it is. For example, strong bullish candle that forms at the bottom of the stock's run is a strong indicator of the stock turning around. Another great example is known as the doji candlestick. This type of candle shows an indecision in a stock and gives us an actual signal of when we can see the stock go in another direction. There are a lot of different candles and different patterns that can be formed that practically tell you what to anticipate. So now that you understand that, and you kind of get an idea of what a candlestick is, let's take a live look at some of these candles. So now we have a live chart that shows us a good understanding of what candles are all about. This is a stock of Johnson & Johnson for a full year. Now you could modify the chart based on timeline. You could modify it based on a monthly chart, weekly chart. For example, if I go here, I could do a weekly basis where each candle represents 1 week. But we want to stick to daily for now, for this example. So when you're looking at charts, remember, white candles are bullish. They start from the bottom, if you look over here, and they go all the way up. Okay, if you look over here, starts from the bottom, goes down to the wick, goes all the way up to the other wick, and comes down. That's what a bullish candle does. A bearish candle is a little different. A bearish candle starts from the top, moves to the wick, goes all the way down on this one. So it gives you a good understanding of a daily movement, and it also breaks down the psychology and a story of what's going to happen. But they also start giving us clues of where the stock is going to move based on certain patterns. There's a lot of patterns out there that you could really study and understand that's really going to give you a good understanding. But for us, what we want to see here is this. If you look at this movement right here, right in this area, look what happens. When a stock goes down, there's always a signal of reversal. So when you're seeing it going down, all of a sudden you see these 2 days where one is close to being what you call a doji. That's a very, very close. So you see a doji right here. You see kind of a close doji to coming up over here, which means indecision. What that's telling you is that the movement is very small. That at this point, the stock doesn't know which way it's going to go. And a lot of times it's going to go in reverse. Now, you don't want to get in on that stock with a doji because we don't know which way it's going to go. It's an indecision. However, the next day we see a nice bodied candle, which tells us, you know what, it looks like the stock is going to go up. And if you tell, you could see this was a doji, and then this one opened close to the moment when it closed the other day, and it shot up. And then what we got was a nice run to the top side. And that's a really, really nice run. Usually, when you see a stock, it will do something called swing trading. So we go up, and it's going to come down. Now, just so you understand, you could make money going up or down. So at this point, this is a good time for us to either do a short or something called a put option, which we could learn a little bit later. So here I see a signal where the stock kind of coming to an end because it finished a little bit lower, And then the next day it had a really strong bearish sign. And look what happened. Went right down. So when we're looking at just overall trends, you could see what went down, went up. And now it's beginning to form a bit of a pattern. Again, if you look here, did it again right here. Went down, had a nice solid white candle right here. You could see a decent body. And that gave us a signal that it's going to go up. After that, we had a really bearish day. So this is a signal for us to get out. And you could see sometimes it'll do a little bit of reversal, but not much. Overall, we saw a nice movement to the downside. Very nice movement to the downside. So this is a nice way to look at that. Overall, we're going to start seeing patterns being formed. Now, there's a lot more to this. There's different indicators. But as you're trading, as you're putting your plan together, you want to make sure you understand what candles to look for, what patterns to look for. For example, if you look over here, you could see this stock went down, but then it had a nice signal to go up. That's a beautiful body candle. So guess what? This is a good time for it to lift up. And overall, you will always see signals. When you're seeing like this, look at this candle. Now that right there is a very nice candle. It's a very strong bodied candle, and it went through a very good breakout point. But look what happens after. Just a big breakout. Which would, if you invested in this moment to this moment, you're in very good shape. And it's going to happen. Right here, you see, right after this point, there's a dojis, two dojis that formed, which told you that it's an ultimate indecision. When you see that, you don't have to get out right away. But when you start seeing this movement here with these bearish candles, that's your sign to get out. When you see this candle, now this is called a hammer candle. What a hammer is, basically, think about psychologically. The stock started here, went all the way down during the day, but the bull said, you know what? We're ready to make this a big move to the upside and finish the day really strong. One of the nicest candles you could have for this move. And you could see, and you had a little bit of a down here, but not really. It came back right away, all the way up here until we saw this candle. Now that's a hammer candle, which is not a bad sign for a bearish one. So this is actually still pretty good. But the next day it opened up with a very bearish signal. We haven't seen a signal like that in a while. This could be a good time to get out. If you wanted to wait and you feel like, hey, maybe it's a different day, you could have waited. And look, there's another one. If you're listening to the news, you'd miss out. This gives you a beautiful way to get in. And remember, stock going down does not mean it's a bad thing. You could make money on a stock going down. So this should be giving you a nice understanding of how candles work. And you could start looking at it. You could see right now. Look at this. We obviously seen this big upswing because of all the news with the COVID. So that's going to affect it. We want to try to stay away from certain moments. But here, you could have seen it. If you got hit by COVID, you could have seen it coming. Look, COVID happened in the middle of July. This was giving you signals way before that. The smart people would have gotten out. And this would have been avoided. But if you look today, look at the trend. So we fell down, we went up. Every stock, no stock goes up. We went down, we're in the middle of an uptrend. But look, there's a doji. My question is, can you tell me what could happen next? Think about it. Can it go up? Doji is a sign of what? Indecision. Based on just candles. And again, we're just starting this. But this alone could start making you look at things a lot differently. You could almost tell what's going to happen. Almost looks like a downturn, right? Can't tell just yet because today's an indecision, so we have to wait till tomorrow. But it's giving you an idea of how patterns work. So that was a great look at candlestick charts. Now, there's a lot more to these charts, obviously, and there's a whole science to it. But what a great way to start looking at things a little differently than what you're used to. It's not just about gambling. There's actual patterns out there that's going to show us which way the stock will move based on psychology. And speaking of psychology, we're going to share another big piece of technical analysis: support and resistance. This is something that every professional uses to make decisions on which way the stock is going to reverse and what time. So most people believe in the whole buy low, sell high mentality. Although that is true, in some scenarios where buying a stock when it's down, you would want to buy it. But what is considered a low point? What if it keeps going down? 90% see a stock go down and start predicting that either it might be a low point or it's too scary. Either way, it's still a gamble. That's why 90% of people eventually get burned and lose most of their account. The 10% understand that there's an exact pattern of when the stock will start going down and start going up. On a side note, the 10% also utilize strategies on making money on a stock going down as well. So if you understand that if a stock goes up, you make money. When a stock goes down, you make money. And you could know the almost exact point for it, how much better are your odds? Stocks actually create points where they will consistently reverse from an uptrend or a downtrend. Consider the stock having a ceiling and a floor where they hit and either bounce down or bounce up. So let's take a look at the following chart. If you look at the top, you could almost see how there's a specific spot where the stock has a ceiling. So if we draw a line like this, it almost bounces off to a certain degree and calms down. Now, like anything else, it could go above it a little bit, but for the most part, it kind of stays there. Now, this might show a bit of a pattern to you, but let's look at a different side of it. There's the bottom as well. So if we have the ceiling, there's also the floor. So here you go. We just created a ceiling and a floor. Usually the stocks will move within this area until a breakout happens. So if you look ahead, look at this. It just goes up and down within that range. And if we continue looking at it, it still keeps going through that range. Stocks have a certain spot where they go up, certain spots where they go down. And there's a lot of explanations to why this happens because people behave in patterns. And a lot of times they'll go to a certain point, everybody sees that certain point, it goes down because people are starting to sell off for their profits. Pretty interesting phenomenon. A lot different than just going by the news. Now let's take a look at a different scenario. Here's a stock that's perfectly following its support and resistance. You could see there's a ceiling, there's a floor. But at some point, there's something called a breakout. The power of the breakout is amazing. Because what happens is, at some point, the stock will break this resistance and will now form a breakout. This is a great time because you could get in and the stock will flourish through and you could collect some amazing gains. On the other side of it, if you look at here, here's a stock that follows that same support resistance, but now it has a breakdown. So it can even break through the bottom part and go for an amazing breakdown that's going to give you great gains if you know how to make money when the stock goes down. Pretty cool, right? A lot of people gain on this majorly, but you gotta know how the pattern works. So this one piece of information alone can increase your probability of trading considerably. The 10% have support resistance as one of the pieces to their trading plan. So let's take a live look at some of these examples of support and resistance. So here I have a stock, Wynn Resorts. Now stocks have different ways of movement. There's uptrends, downtrends, and sometimes they're just horizontal. So what we're talking about when we're looking at support resistance for now is when the stock is horizontal. If you look at this area right here, so this area is moving horizontal. Now, when it comes to other types of moves, that's a different situation. It's a little bit different of a lesson. But in this scenario, it's really giving us a good pattern. So if I click here and I just draw a line, look what happens. You could almost see how perfectly this lines up to support and resistance. It actually trades within this line for a while. Now, support resistance can be in different areas. Depends on how far you look at it. So if you look here, look at this. Now what this forms is called a double bottom. It's another type of pattern where when you study candlesticks on a deeper level, they form patterns. So this is one of the patterns. When the stock goes down, it'll retrace or go back up to a certain area right here, and then it'll actually come down to the same point. That's your support resistance. And you could see at some point it went back up and created another support and resistance. If we go back, so if I close this now, and I'll go back to here and I'll actually look at a year chart, or maybe let's even do 2 years. So now you could really see a prettier pattern of what's going on. So remember, each candle is a daily candle for 2 years. We could change it around if we need to, but for this example, if I draw a line right here, you could see how there's points that are being bounced off. And if I draw a ceiling, and if I draw a floor, there you go. So you could see how many times it bounced, like a basketball. 1, 2, and then it just kept bouncing off of it. So it gives you a good idea and a good indication. Now, if you look over here, it has another swing point where it goes back in time. So if we go back, you could see at some point, you could actually go to this area. So this is another point where it turns into support. There's different ways of looking at this. But when you start understanding, look, that there's actual swing points, you'll understand that at some point, they will break out. And you could look for that. But the power of anticipation to find it is amazing. So keep that in mind, guys. It's very, very important. Every professional uses support and resistance. So definitely include that in your trading plan. So now you have a great understanding of not just candlesticks charts, but actual support and resistance. These are just a few tools that you could have in your disposal that could help you make real logical decisions on what the chart is going to do. Now, obviously, there's a lot more in-depth look at the candlestick charts and different patterns it creates. Same thing with support and resistance. There's different ways of looking at it and the way the chart moves. But this should really give you a good understanding as a starting point. So now that you have a bit of an introduction of what candlesticks and support and resistance are, let's talk about the momentum tools. So proceed to part 2 of this video, and we'll discuss how they play a key component to which way the stock is going to move and why. See you guys there.